Welcome to Trading Lounge and the Australian report. And I want to start with the bigger picture for CBA and also the ASX 200 and then move in. So with CBA here, we know this is the largest weight on the ASX. So the ASX tends to follow the finance sector's wave count. The materials can certainly pull against it and make and sort of skew the ASX a lot as well. If they're both running in the same direction, well then everything runs quite true. The situation here is reasonably clear, is that the GFC that came down through here in three waves is corrective, and that would be the same for the ASX as well. In this case here, we've got wave 1 and 2 and 3 here, but before I go into wave 4 here, the main point here is that CBA has taken out the top of this old high here in 2007, and when we look at the ASX, for instance, it's never taken out its high here. Okay, but we would assume that this move down here is in three waves, the same as the CBA, which is quite clear. So we'd been looking at this moving up in 5, and wave 5 would be expected to take the top out here. It doesn't have to, as long as it produces 5 waves to the upside, and we've got wave 1 and 2 here and wave 3 here, and as it stands at the moment, we've been looking at this scenario here, if I can just remove these for a moment, as wave 4 here and wave 5 up here, and wave 5 up here would have 5 waves in it here in terms of 1 and 2 and 3, and coming back for 4 here, and then going up for 5 here. And like I said, in Elliott terms, it doesn't need to take the top out here, as long as it's got 5 waves here. So it may do, it may not, and all the rest of it. But yeah, this situation in here of getting 5 waves up here, we've only got 3 so far. We've got 5 waves down here, and well, they can be counted as 5 waves reasonably well, and we've only got 3 waves up here. This never took the top out here, so we're stuck with 3 waves here. So that's why I was thinking that wave 4 could be over here with an A and a B and a C wave here. So that would give us a much more deeper correction here as wave 4, then wave 5 up here. So comparing that to CBA here, what would need to happen here is that, you know, if we look at this as wave 4 here, which is fine, but the move up through here doesn't count as 5 waves. You would count it, you know, if you, at first glance you would count it as 1 here and 2 here, and then 3 and 4 and 5 here. But I know that this first move up through here doesn't count as 5 waves. It only counts as 3 waves, and I pulled that apart on the tick chart. I was there at the time and I paid a lot of attention to that. So really this move down through here, yeah, well, basically this whole move up here can be an A and a B and 5 waves up here for the wave C here. And what can occur here, this is what we've got to try and figure out, because if this is basically the A wave here, the B wave here, and then the C wave here, this C wave will be in 5 waves. It will be 1 and 2's in place, so then there'll be 3, 4 and 5 here, and then we'll go up to finish that 5th wave. And if that's the case with this one here, then we'll come down in 5 waves here, and then move up here to make this last move up here in line with you know, with the S&P 500 and the DAX and the rest of the world, and this is really quite a serious top. But if I need to see if there's any places that you know, I've made a mistake in, and I need to talk about that with CBA because it's going to be quite the dominant one. I know where the resources are as such in their wave counts. I won't look at that today, but you know, they're doing their last wave up. And basically, when I've been talking about South 32 as such, moving up to about $3.30, $3.40, $3.50 would be a top there for those markets. So what I want to point out here, if I've made a mistake, the mistake would be that this would actually, even though it's not the low here, this would have to be the low here, and that way we would look at this as wave 1 up here, then an A wave here, a B wave here, and then a C wave down here somewhere, and then the move up here. So this becomes wave 1 here and wave 2 here, and then we move up for wave basically wave 3, 4 and 5 and top out up there, and that will be the top. So I don't know if we're going to get 5 waves down back down to this low area here, or we're just going to get 3. The way that I can see it so far happening is that we actually get 5 waves down here. So yeah, that's sort of where we are with this. So on the daily chart here, I can just bring this across here. So if I take that as a low, which is the low, then we'd look at this as wave A, wave B, and then 5 waves up for wave C here for wave B. And then we would be looking for, let's get this across over here, then we'd be looking for 5 waves down here. So we'd be looking for 1 and 2 and 3 and 4 and 5. Now it's also possible that, if I can just borrow these here, if we don't take that as the low here, and I know that's 3 waves up here, but if we, for instance, took this as the low here, for example, just copy and put that there, and then we look at these as 5 waves up here, well then we would look at this as the A wave here, the B wave here, and then the C wave coming into this space here, and then that would be the end of it here. So we'd be looking to count 5 waves down into here, and then we would get the move up through that way there. So I don't know if we get this A, B or C and move up, or we're going to get this, larger move down here and then the move up here. So I also, I know where the S&P 500 is and so on. So they're going to go into, when say the S&P hits 2,500, then it's going to go into a large correction as well as a big wave 4. So, that could also put pressure on these markets as well. So yeah, look, that's sort of where we are. And with this one here, if we looked at this here as wave 4, coming into this space here and looking at this as 1 and 2 and 3 and 4, and that's what we've been looking at the moment, looking for 5 to go up on the daily chart here. In this case here, looking at wave 4 here as 1 and 2 here and wave 3 here. I find wave 3 a bit sort of small really compared to wave 1 here, but I can work with that. And then the other thing here too is that the move down here in 5 waves as wave A here doesn't quite overlap wave 1 here, but then we've got this triangle pattern that we'll talk about in a moment again, but we've been talking about for a long time, but as wave B, and then wave C to come down here as wave 4, but then it's really going to overlap wave 1 here quite a lot, isn't it? But we also have seen that before as well. I won't go into that, but so I know this is corrective here, right? Whichever way you look at it. So we should be taking this low out here, which will, make it really overlap this market here. So, but the reason I think it's wave 4 here is because we've got a triangle pattern in here, and wave 4s either happen in B waves or wave 4s here. They don't normally happen in wave 2 here. So if we looked at this as wave 1 and then wave 2 here, coming down for wave 3, it's very, very unusual that the triangle pattern of this nature would be in wave 2 here. It's possible. So it is possible that can be wave 1 and wave 2 here, but wave triangles don't happen in wave 2s, and it's a pretty clear pattern that it is a a triangle pattern as such. So when we come into any of these will do here, this triangle pattern that we've been tracking here as well, wave A down here in 5 waves, and then an A and a B and a C and a D, and then I've looked at this as an A and a B and a C here for wave E here, for wave B, and the interest rates yesterday moving up strongly, and still got further to move up as well, because you know the wave count on the Australian dollar that we've had, you can just easily see that on the website. So this move coming down through here, I think we just need to sort of stay, I've explained the bigger picture. So we've got a possible wave 4 here, which I think is realistic. We also know that CBA here, the thing about CBA too is that it's pretty much the only stock that moved down and moved back to the 61.8% mark here. Because if we look at the other ones, like this is the banking sector, XXJ here. So CBA moved back up to its 61.8%. This market hasn't, but it's fallen out. It's possible that this could be up for wave 1, back for wave 2, up for wave 1, back for wave 2. But if it takes this low out here, then that's not the case. It could also be an A and a B and a C here for the A wave, then the B wave here, and then the C wave back up here. Because when you look at WBC, for example, you can see that, it's even weaker. It never pulled back up to its 61.8% here, and neither did ANZ as well. So ANZ here hasn't pulled back up to its 61.8% and still could. We need to be mindful of that. But if I think about it for a second, if ANZ and WBC did pull back up to their 61.8%, well, then where would that leave CBA, for instance? The bigger weight here, then that's going to bring it like way back up here somewhere and then collapse from up here. But I don't think that's the case, because this is the leading stock and it's already done everything that it needs to do. And, it's got that pressure to the downside now. So coming back into this scenario here in the intraday business here, let's sort of move into that. If we look at this is actually quite a nice triangle now in terms of the A, the B, the C, the D, and ABC for the E wave here as B. And then the fact that this has moved down through here, it hasn't given us an impulse wave yet, which is 5 waves, but it's sort of 2/3 of the way through that at the moment. But if we do get 5 waves down here, then we can expect this rally here, and then our short trade will be wave 3 here. Okay, so that will be the setup. That's where the money is in this move here. So I think that if we go into that and investigate that sort of setup there and see where we are here. So as it stands at the moment, this is the triangle pattern here, finishing at wave B here. We've had, because I had 5 waves up here, so I thought that we would go up for wave 1, an A and a B and a C coming back for wave 2, and then wave 3 coming up. But those comments from the RBA yesterday, really pushed, the stock market down and the dollar up, because obviously people have got to, not have to, but borrow to go into these markets, and plus other third world countries have been lifting their rates and so on, so it's only a matter of time. So if this count here is correct, then we have wave 1 here, an A and a B and a C for wave 2 here, then wave 1 and 2 here, down for wave 3, little triangle pattern here for wave 4, and then down for wave 5 here for wave 3. So you know that wave 4 would pull back to the wave 4 of 1 lesser degree here. That's also the 38.2% retracement, roughly speaking. I think it's a tad above it, but that's fine. And then if that's the case, then we'll be looking for wave 5 down. Now, we expect wave 5 to take out the low here And because the extension's in wave 3 here, we would expect wave 5 here and wave 1 to be roughly the same here. But once that's in place there, then we would be, because we have an impulse wave here, then we would need to look at this as an A and a B and a C here, and then down for wave 3 here. Wave 3 coming down here should be longer than wave 1 here. So it gives you a bit of an idea. Because we've got 5 waves here, that means we'll get another 5 over here. If this is a corrective pattern here, then that helps us confirm that we're on the right track here as well. It doesn't have to pull back to the 61.8% mark. It may just come back to the 5-7 here as well. So we need to be we need to really study and be mindful of this scenario here. But having 3 waves in here somewhere will give us what we need to be on the short side here. Just on the tick chart here, just for a little bit of detail here, from wave E here, which is that wave B up here as well. I can just put that in here just to give us our bearings here. I'll just save that. So yeah, this is how it counts. So quite a nice move down here is wave 1, an A wave, A, B, C for the B wave, and up for the C wave here for wave 2 here. Then 1 and 2, nice third wave here. That fourth wave here can actually sit over here for that. And then we would be looking for wave 4 to come back up through here. So the retracement level here, I've got this upside down, but it doesn't really matter. So that's 618 here, right? That 57 here, that's actually the 38.2, it's just upside down. So that's our target area. So what we could say too is that, you know, we have seen high wave falls before as well, but if we, you know, we'd expect this to come up into to 5.7 over. I can't draw on this side here. So you know, if we found that we've got a nice support for whatever reason sitting on here after you know, classic trading levels pattern here, sitting on here, well then we would have to go along. But far as I can see so far, we should be moving up into the wave 4 of 1 lesser degree here, and the 5700, we're working with that number there. So it can trade above it, but we don't want to see it finding support there. If it's finding support, then we need to be on the long side with it. But it would still leave this unfinished here. Then it would be an A wave, a B wave, and a C wave down here. So I don't think that's the case. So let's just see how all of this pans out. Let's see if we get wave 4, then wave 5 here, because if we get those 5 waves here, we can trade long back up to here, and we can trade short down to here, of course. But it will be, at the end of the day, it will be this wave 1 here, and wave 2 back up here. That wave 2 will be the trade that we'd be looking for at that point. Okay, so yeah, we'll just sort of leave it at that at this point, but certainly banks are in a weak spot, and the ASX 200 is in a weak spot. We've also got, on the positive side, we know that I'll just go back to S32 because South 32 here, because it was just, you know, it's just a nice easy pattern. So this is the same as Glencore, which is a big one in the UK, and most of the other sort of stocks in this line here. We've got, for anything on this January low here, we've got basically wave 1, wave 2, all the way up for wave 3, an A and a B and a C for wave 4, and we're looking for 5 waves up for the resources. So we're looking for somewhere up in here. We're in the 3rd wave here at the moment for iron ore and things, so iron ore stock. So, but once this wave here finishes, then that's it for these guys. We won't be long. We'll be going short in the resource stocks at this particular point in time. So yeah, and I'll talk about this bigger picture here for the resources at some other time, but currently we need to stay long here. This is wave 1 and 2 in here. This is wave 3 developing. These tops here will create the top for wave 3. There'll be a wave 4 back and then a wave 5 up. So 330, 340 in this particular case. So that's where you can expect all the other markets to rally to. FMG is a little bit different, but it's still in the rally point as well as a corrective rally, and so on. And we've talked about iron ore before as well. Copper's in a. I'll drag the iron ore chart across here. So with iron ore here, we were looking at this as 1 and 2 and 3 and 4 and 5 here. Then we're looking for an A and a B and a C correction. It was really small. So this is not finished to the upside yet. It will be stuck at the 500 here, but it will go higher here. And also copper as well is in its bullish mode and will go higher as well. And that's why we're trading OZL and S32 and so on and so on. So they're all positive. So we've got positive. It's the classic sort of portfolio flip over of changing from banks to mining as such. So yeah. All right, I'll leave it at that. Thanks for listening. Cheers.